The latest employment data may have changed everything for Bitcoin. The United States economy is heated, and with that, interest rates may continue to rise. This puts pressure on the cryptocurrency market. But has Bitcoin's bottom been reached yet? Why are some investors seeing this as a unique opportunity while others are panicking? How can this movement transform the crypto landscape at the end of 2024? Every move matters, and the future of this cryptocurrency could be very different from what is imagined now. The impact of employment data on Bitcoin, the calm before the storm. The global financial market is paying attention to the impact of the latest employment data. With the jobs report showing strength, investors are beginning to question, has Bitcoin already bottomed out in the fourth quarter of 2024? This doubt hovers because a hot labor market indicates that the Federal Reserve may maintain its aggressive stance of raising interest rates. And here's the crux of the matter. Higher interest rates often reduce the attractiveness of risky assets like Bitcoin. But has the market already absorbed this information? That's where the scenario becomes interesting. A strong economy. What does it really mean for Bitcoin? The solidity of the employment data may seem positive at first glance, but for the cryptocurrency market, the implications could be complicated. When the economy strengthens and the Fed responds by raising interest rates, investors often seek refuge in safer assets such as government bonds. This puts pressure on Bitcoin, which is seen as a volatile and riskier asset. However, the real question is the market already adjusting to this scenario? Many believe that Bitcoin may have already reached an inflection point. If the Federal Reserve indicates a slowdown in rate hikes, the cryptocurrency could start reversing its downward trajectory. Opportunity in sight. The window for brave investors in times of uncertainty. The most attentive investors begin to glimpse opportunities that others ignore. If Bitcoin's bottom really is in the fourth quarter of 2024, it could be the ideal time for those looking to enter this market. The strong correlation between monetary policy and the price of cryptocurrencies is evident, and many savvy investors are watching closely for the Federal Reserve signals, with the expectation that at some point the cycle of rate hikes will cease. Bitcoin could emerge as an attractive option for investors willing to take the risk. But time is crucial. Is this the perfect window? Bitcoin and its role in a changing macroeconomic landscape. To better understand whether Bitcoin is bottoming out or not, one needs to consider its role in the current macroeconomic landscape. Inflation is still a dominant factor in the Fed's decisions, and the employment data is a powerful barometer for understanding the direction of monetary policy. If the labor market continues to heat up, the Fed may find itself forced to keep rates high for longer, making it difficult for Bitcoin to recover. On the other hand, if Bitcoin manages to withstand this pressure, we may be facing a phenomenon that signals its resilience as a value asset. This begs the question, are we underestimating the strength of crypto's recovery? The turnaround may be closer than it seems despite the complicated macroeconomic scenario. Some analysts point out that Bitcoin is already showing signs of stabilization, even with the constant interest rate hikes. History has already shown us that the cryptocurrency market can recover from times of extreme pressure. One possible scenario is that once the Federal Reserve begins easing its monetary policy, Bitcoin will quickly gain traction, pulled by market optimism. If that happens, the end of 2024 could mark the beginning of a new phase for Bitcoin. It remains to be seen if you will be ready to take advantage of this turnaround.
With